What if I told you that one single news report, just one, sent oil crashing 7%, pushed the S&P 500 and Nasdaq to all-time highs, and could save the average American hundreds of dollars at the gas pump? Well, that actually happened yesterday. And the crazy thing is, most people have absolutely no idea what's really going on behind the scenes. Stay with me, because this changes everything. Welcome to This Explainer. I am so pumped to be guiding you through today's analysis because we are looking at a massive, cascading series of market shifts. We're going to unpack the data, follow the money, and figure out exactly why global markets just went into overdrive. Let's dive right in. So, you're probably wondering, what kind of news could possibly cause such an aggressive, immediate reaction across completely different sectors of the global economy? I mean, we're talking about historic, record-breaking numbers here. And this doesn't just impact Wall Street traders, it directly affects your personal budget, including potentially saving your family hundreds of dollars in gas. To really grasp the sheer magnitude of this shift, we have to look at the exact catalyst that knocked the first domino over.
And that brings us to Domino 1, the bombshell peace deal report.
On May 6th, Axios dropped a total bombshell report. The United States and Iran are reportedly close to a one-page peace deal, basically a memorandum of understanding to end the war and begin nuclear negotiations. And the result? Oil crashed. Stocks exploded. Wall Street had its biggest single-day rally in months. The moment that report hit the wire, markets went absolutely vertical. The S&P 500 surged 1.46%, closing at a record 7,365. The Nasdaq jumped 2%, closing at 25,838, also a brand new record. The Dow Jones added a whopping 612 points, and if you look closely, airlines actually led the charge. United Airlines was up 8%, Delta up 7.4%. Honestly, any stock sensitive to oil prices just went completely crazy. But you can't have airlines surging without the other side of the equation crashing. Which leads us to Domino 2, oil plunges and political breaks. To really appreciate this crash, you have to remember that going into yesterday, oil was up over 65% since the start of 2026. So this wasn't just a minor daily dip. This is a massive reversal. U.S. crude oil plunged as much as 15% intraday, touching $88 per barrel before finally settling down 7% at $95. Brent crude fell 7.8%. Wholesale gas prices dropped 5%, and jet fuel fell 6%. When jet fuel drops 6% in just a few hours, you instantly understand why those airline stocks we just talked about rallied so hard. Their biggest operating expense literally just fell off a cliff. However, just as the markets were celebrating, President Trump pumped the brakes. He told the New York Post, and I quote, "It was too soon to sign a peace deal." Objectively speaking, that statement cooled the initial euphoria right down. Oil even bounced slightly off its extreme lows. But here's the fascinating part you need to take away from this. Even with Trump's caution, markets still closed at all-time highs. The hope trade is real, and it was simply too powerful for the market to ignore yesterday. To truly grasp why a simple one-page memo carries so much weight, we have to move to Domino 3, the Strait of Hormuz factor.
The Strait of Hormuz is one of the most important choke points on Earth. This isn't just about the two countries involved, it's about the entire geography of global trade. Roughly 20% of the global oil supply passes through it every single day. When the war started, Iran closed it. Right now, as we speak, thousands of commercial ships are still stranded there. If a deal happens and the strait finally reopens, that massive bottleneck of supply floods the market. That is exactly why oil prices could collapse even further.
Okay, but how does all this global macro stuff affect you? Let's bring it home with Domino for Main Street impact.
It's super easy to get lost in the geopolitical strategy, but this actually hits your daily commute and your wallet. Right now, the average American is paying $4.22 per gallon of gas, according to AAA. That is actively crushing household budgets nationwide. But if this peace deal closes and oil drops below $80 a barrel, analysts say gas could fall back toward $3.50. Think about that difference. That is hundreds of dollars a year going right back into your pocket.
And that consumer relief ties perfectly into Domino 5, the Federal Reserve, and rates.
Here's the connection most people completely miss. Just last week, the Federal Reserve held interest rates steady at 3.5 to 3.75%. Why? Partly because oil-driven inflation is making rate cuts impossible right now. But if oil crashes due to a peace deal, inflation cools. And that opens the door for the Fed to finally cut rates, which means lower mortgage rates, lower car loans, and massive relief for millions of Americans. Plus, there's another massive story running parallel to this. Jerome Powell's term as Fed chair ends on May 15th. Kevin Warsh, Trump's pick, just cleared the Senate Banking Committee 13-11.
He's expected to be confirmed any day now, and he has explicitly signaled he wants rate cuts. If oil falls and Warsh takes over, we could see rates drop way faster than anyone currently expects.
So as all these dominoes fall, what are the pros doing? Let's pivot to Domino 6, Earnings and Investor Strategy.
While all this is happening, today, May 7th, Wall Street is laser-focused on 3 massive earnings reports that will give us real-time clues. First up, Coinbase reports for Q1 2026. Analysts are expecting $1.5 billion in revenue as crypto markets show strong recovery. Next, Airbnb reports, and they are being heavily boosted by Bitcoin sitting near $81,000, which is seriously fueling the travel economy. And finally, McDonald's. They give us a direct, unvarnished read on exactly how the American consumer is holding up under inflation pressure.
So, looking at all this, here is what the data tells us right now. The definitive winners, if this deal closes? Airlines, travel stocks, and consumer discretionary. The biggest losers are energy stocks. Meanwhile, tech and chips, like AMD being up 18% yesterday, they just continue to lead regardless. Now, quick heads up. The S&P 500 RSI is now above 70, which is technically overbought, but momentum is still a powerful force driving prices higher. Smart money is simply not fighting this rally.
Which leaves us with this final question to chew on. If the peace deal is finalized, are you prepared for the next domino to fall? Here's the bottom line. A U.S.-Iran peace deal is not confirmed. Trump himself said it's too soon, but the market is betting it's coming. Oil is falling, stocks are at record highs. Understanding how these pieces connect is the absolute key to navigating your finances this year. Keep analyzing the data, stay focused on these structural shifts, and keep asking questions. Thanks so much for learning with me today, and I'll catch you in the next explainer.